Welcome to TheoTrade. This is Don Kaufman. Here we are doing the Theo Night video on December 14th, 2016. The day the FOMC announcement comes out. Clearly and decisively, you can see the volatility here in the S&P futures. I'll give you the quick and dirty synopsis of the FOMC and Janet Yellen's press conference over here. They raised rates by 25 basis points. No surprises there. In 2017, they're expecting to do another 3 rate increases. No surprises there. And really, you know, the FOMC announcement has become a little bit of a dog and pony show, as coming into this announcement, there was almost a 100% chance that we're going to do a 25 basis point increase. So the question is, why did the markets react the way they did? Right now we have the S&Ps, and the markets just closed 5 minutes ago. The S&Ps are down just about 15 points. Okay, the Nasdaq is almost massively unchanged. The Russell kind of taking it out on the chin. Again, over a 1% hit inside of the Russell. However, one thing I really want to point out in today's marketplace, number one, today's marketplace, it's not really about individual stocks. Sure, we can talk a lot about sectors, but forget about Apple. Apple is massively unchanged in the trading day, and Google ends up, okay? But what's much more important is really a little bit of the undertone of the marketplace. And one thing I want to point out, again, right up front, happens to be still a heavily bifurcated marketplace. And what that ultimately means is, this is a feature you guys may or may not look at. It's a feature that happens to be, as far as I know, kind of specific to thinkorswim, but you can see, okay, like S&P 500 advanced decline line on almost any trading application out there. In this particular case, what I happen to be looking at, it's a feature on thinkorswim. It's under visualize right there, okay? And here we have the S&P 100. It's under index watch. All it is, all right, just a quick reference, it's a visual representation of what's up and what's down in the day. Anywhere you drag your mouse, right, stocks that are up, stocks that are down. In a typical down day, and we've had a down day. I mean, the S&Ps just prior to the close were down about 20 points. In a typical down day, when the S&Ps are down about 20, you should see about 9-to-1 decliners to advancers. And we're nowhere near that. Okay, we're still in this highly bifurcated marketplace where, for the most part, you know, we're not getting, again, high correlation. So you want to see high correlations for markets to start to normalize. And you're like, well, what do you mean? This isn't normal? No, we're nowhere near normal. Have you seen the rally the last couple of weeks? You know, the markets can be described as a lot of things, but, you know, how wild of a standard deviation move to the upside this is pretty far from normal. Anyway, we continue to see this highly bifurcated marketplace. Now, in addition to that, okay, the 800-pound gorilla in the room happens to be the bonds. The bonds today apparently do not like what Janet Yellen and the Fed are doing. Or maybe they loved it. Whichever way you want to look at this, okay, the bonds were up. Here they are almost at the 150 level. And again, just to project out how large this move is, right there we're at 149 and 24 ticks, just shy of the 150. There are 32 ticks to a 1-point move in bonds. So there's bonds hovering in and around the 150 level. And you got to get a handle on this. Here they are closing, okay, at 147 and 18 ticks. That's a wild intraday reversal. So one of the largest statistical moves that we've seen today, especially on a percentage basis, happens to be inside of the bond markets. Now they closed down 0.8%. Yeah, but that doesn't, you know, discount the fact that they were trading 150 and 5 ticks this morning, all the way down to 143. Okay, in addition to it, the 10-year. You can't count out the 10-year. A wild and woolly move inside of the 10-year. Now, what does this really do? When you look at the 10-year, and if you're not really familiar with bonds, again, I get it. Bonds, it's not so much about the bonds. It's about interest rates, okay? And the interest rates out there are starting to get a little bit crazy. So interest rates, this says 25.3, but that should be read as 2.53%. So interest rates are exploding right now to the upside. Well, that's have a really positive effect. These interest rates have had a really positive effect right here. in a little product called XLF. If you're not familiar with the XLF, it happens to be none other than the financials. Now, what's unusual today, interest rates exploded higher. Again, look at the interest rate on an intraday basis. Can't even make this stuff up. Ladies and gentlemen, that's a gap in interest rates. That's the 10-year, all right? The yield exploding higher over there. What do the financials do at the same time? Again, rising interest rates has been fantastic. Yes, initially, okay, the financials said fantastic, and then they faded. In fact, they closed down about 0.5% over here. That's important. Why is it so important? Broader look at the XLF. What's the broader look? What do you think led the entire rally inside of the S&P 500? Led the rally inside of the Dow? Led the rally in the broader marketplace are the financials. This could be a very pivotal reversal. And again, I'm not much of a market technician, but the unusual aspect over here, we have S&Ps down, pretty good clip. We have bonds down big, notes down even bigger. Very rare to see notes down almost a full point. Okay, oil's even off today. The commodity products are off across the board because there's strength, big time strength in the dollar. I mean, we're literally hitting highs of the dollar once again. There's ultimately no stopping the dollar as it's breaking out to the upside at this point. Could put some more pressure forth on gold. But more importantly, in the short duration, inside of just this week, Thursday and Friday left of this week, watch the financials like a hawk. And we've had eyes on them. Okay, watch the financials like a hawk if they start to break down. Again, we saw a number of very key reversals inside of products like Bank of America that ended up, generally speaking, unchanged in the day. But look at some of the wild, okay, intraday trade over here. This has been a one-way ticket to the upside. Again, if you haven't looked at a chart on Bank of America, it's worth your time because it's literally been a one-way ticket to the upside, having its high, obviously, earlier today. This is still considered, though, okay, a major reversal. Again, stock trading 23.30 earlier today, closing at 22.67. Again, largely unchanged in the day, as were many of the financial products. Wells Fargo, kind of the odd man out there, closing down on the trading day. So obviously, Thursday, Friday this week, again, we want to watch financials very, very carefully. One thing I also caught out of the corner of my eye right before the close of the day, the volatility remains quite substantial inside of the financials for Thursday and Friday. Why? Well, before the FOMC announcement, the financials were sitting at about a 30% implied volatility. Why are they still at 27%? What do they still see in terms of risk? You know, there's a Bank of England announcement and some minutes out there, but neither here nor there. There's a 43-cent expected move on these guys for just Thursday and Friday. Again, it's peculiar. It's still extremely high. Financials could be under pressure. In addition to watching the financials to see if they're going to break, okay, the other thing we really want to take a look at, once again, is correlation. If you're seeing markets start to move in relative tandem nature, okay, that is, are we going to have 90 advancers, 90 decliners inside of the next, day or two in the markets? Are markets going to start to normalize? That could actually be a more distinct sign of volatility coming. Last, but definitely not least over here, there has been, okay, a drastic increase, speaking of volatility. Now, sure, the market sold off here a bit, okay? I mean, listen, 0.7%. It's nothing in the grander scheme of things, okay? But what is something, and what I don't think a lot of people have eyes on right now, is this is the VVIX. And I look at it from time to time. It's usually not a significant product to have eyes on. Right now, it's substantial. And the reason is it's having a fairly, again, meteoric rise as of late. This is a volatility of the volatility index trading from the 80 handle now all the way back up to 97. What it ultimately means, the volatility index, it's who's buying, okay, options inside of the VIX. So the VIX options right now, the VIX barely moved today. Yeah, the VIX barely moved, but the options themselves inside of the VIX are being readily bid. That means there are heavy buyers of volatility options. More often than not, it is a display of risk. And to move the VVIX, you have to trade these January VIX options. Why? Because it's a measure of 30-day volatility. So if you actually close this up for just a moment, you open up option statistics, okay, and get a read on this. We only did about 500,000 VIX contracts today. It's nothing extreme. Nevertheless, volatility is most distinctly being bid up inside of the VIX. Okay, the next 2 days, again, we've gone over very specifically, watch the XLF. Okay, obviously we've seen the XLF now and financials down with bonds selling off. Typically bonds selling off is positive financials. Okay, we inverted that relationship today. Apparently interest rates, they may be appreciating too quickly for this marketplace. Again, next, you want to look, of course, at advanced decline lines over there. Are we seeing like that 9-to-1 kind of advanced decline line? And last but not least, of course, eyes on this VVIX. If you've never looked at it before, put it on your screen. Okay, somebody has been buying up volatility. Even if we rally a little bit Thursday and Friday, you keep your eye on the VVIX. If it gets bid, okay, even coming into like the holiday weeks over here, you still have to be a little circumspect of maybe some more volatility coming in and around the holiday. Thanks everybody for joining us here at TheoTrade. I am Don Kaufman. I'll be in the TheoTrade chat room all this week. Have a great evening. Bye-bye.